One stock that's definitely capturing the market's imagination with its sharp moves and the performance is CG Power. Remember, yesterday after the results came in, the stock was down almost 5%. Today, it's undoing a lot of that cut. Now, the whole chatter around CG Power in the last, I think, 12 to 14 hours has been on margins. The stock fell yesterday because the margins cooled off quite a bit, coming in down to the 12% mark versus 15%. But in the conference call, the management is saying that, the margins will go back to earlier levels, and perhaps this is a one-off. So let's start right there. We have plenty to discuss with Mr. Amar Kaul, MD and CEO of CG Power and Industrial Solutions. Great to have you, Mr. Kaul. First chat. Thanks for joining in. So let's really start there and get the whole market concern out of the way, and then we'll talk about the big picture. On margins, the dip, I think, happened in the industrial systems business, right? So what makes you confident that this will turn around in how much time? And what is the target margin level? Let's say exit FY25. What is the margin level that you'll target at the blended company level?
Right. So if you see, thanks for having me here. Important is to go a little deeper into what are the margin story there. So what you see there, a dip is not truly dip because this is more of one-off. And the investment that is a special investment that we have done into strategic businesses, right from acquisition expenses to developing our future potential, both in industrial as well as for the power business, and that's where you have a dip seen there. But if you look at, honestly, if I take out those expenses and look at the adjusted PBT, you go back to normal. So honestly, I'll not be worried about the industrial business so far, and there's a pretty strong strategy behind it.
So you were at 14% margin last year, full year margin. So when you say this is a one-off and you go back to normal, then what's a normal range? What will you target by the end of the year?
So we will be going, of course, it will not be forward-looking numbers to this, but I think important is the action that we are taking right from our go-to-market strategy. Now, industrial, we have been saying, okay, market has not been so good, but what we are doing is control what we can control. And that is something like go-to-market strategy, acting on the areas where we have not been present, and that's where going and opening the doors. And also ring-fencing the customer with the full solution. Rather than being a product company, we want to be there as a solution company and on energy efficiency area.
Yeah.
So that's going to drive. And second area that we are strongly focusing
Amar,
on.
hi, morning. Amar, we have a long run. We have questions. Could you? Sorry to push, Prashant here. Morning, and good to see you again. What can margins be? Give us a sense. How much can the recovery be? Looking for a number.
Yeah, so it'll go back to where it was probably a quarter or 2 quarters back. So, and it'll keep improving from there on.
So same quarter last year, you were at 15%. I mean, I'm saying quarter. But at the end of the year, full year, you were at 14%. So can we expect 15%?
It'll go somewhere in that range, yeah.
Closer to 15%.
Okay.
Let me touch upon the other thing, which is the board approval to raise money, 3,500 crore QIP. So you already have about 1,300 crores of cash on the balance sheet. So what is the need for the QIP? Give us a sense, and where will this money be used to? When are you planning to do this? And could you give us a sense of, why? Yeah.
So yes, your point is right. We do have about 1,300 plus crores of cash sitting there, and we have the investment commitments. If you see in the semiconductor area, we already have made commitments for acquisition of radio frequency component business. So there's a commitment on that. There are more potential acquisitions in the pipeline to keep growing on that. And then when we looked at the cash flow at the end of the year with those commitments, so we'll be at an area which may become a question at some stage towards the end of the year. And the expansion we want to do both in the power sector as well as on the industrial side. And you'll see those things coming up because the demand is so huge. Even with more and more investments, we need to still expand the capacity. So today, if you see, yesterday the board approved up to 40,000 MVA capacity. I think we would look forward to doubling it in next 1 to 2 years. So those investments we'll need this money for.
All right. Hi, Amar. Good morning and good to see you in. This is Nigel on this side. So break it up for us. You have 1,300 crores. You're probably looking to raise 3,500 crores. So the 4,800 crores, how much of it will be used for Capex? How much of it will be used for inorganic?
So see, right now our commitment of about 1,300 crore plus is on the acquisitions and only on the acquisition piece of this. And plus, as I said, there's a pipeline of candidates that we are looking at for potential acquisitions as well. And then I would say approximately we need at least the visibility that I have right now is almost 1,500 crores additional immediately on the capacity expansion with the way market is going.
Got it. All right. Amar, CG Tronics, it contributed only around 20 crores to the top line because obviously that acquisition just got closed out. So, how do you see this asset scaling up? Because the targeted market is massive. So what would the revenue targets be on this asset?
So see, it's a step by step. We need to have patience for this coverage. The good news is we got a small development order from Railways coverage locomotive, which should get executed in 9 to 10 months. Another tender has opened for 7,500 crores, which we have participated. Hopefully, in between December, January, that should get materialized. And so that's what starts the whole journey. And the potential that we see in this company and the synergies with the rest of the CG business can be phenomenal. So I cannot give you the number right now on 20 crore, but I think it's just the beginning of the bigger things to come in future.
So on a quarterly run rate, it should start clocking around 40 crores odd?
Oh yeah, I think that should be easily cut. I will be much more than that.
Okay. You want to give us a number? On a quarterly run rate, what should we brace for?
Not right now, any number on that. Because as I said, 7,500 crores is the tender. Even if we get 10% out of that, which has to be executed in 12 months' time, you can do the math.
All right, very quickly, with regard to your vision for the company since you've taken over, you're talking about capacity addition, you've done some inorganic growth, and also you're looking at some diversification. Give and take everything, I'm reading a couple of brokerage notes. They are saying that the earnings should compound by around 30% over the next 3 to 5 years. Doable?
Absolutely. I respect your shareholder investors' opinion as well.
But
this acquisition, I just want to go back to the acquisition bit. So you said 1,300 crore for acquisitions. You said you have a pipeline of acquisitions and Capex will require about 1,500 crores.
Yeah, approximately at this point of time. The market is pretty dynamic, so we'll keep adding on.
And the acquisition and this pipeline would be in what area? Because you're kind of diversifying away from just being you already have, not away from transformers, right? So could you give us a sense of what the pipeline consists of? What businesses? What kind of businesses? What segments are you looking at?
If you see, yes, we forayed into semiconductor industry, which is, of course, the future of the industry. And we are not getting only the manufacturing and testing into the country, but we are also getting the design capability so that we are on its own. And if you see semiconductor, it's used everywhere, right? We buy IGBTs today, we import it from outside the country. All that is going to be manufactured here in the country. So we'll keep expanding and investing into those areas to make sure there are synergies across the overall CG.
So, that's exactly what I was coming to, because to get into semiconductor design, you acquired a small company called Renesas, right? So what should we expect on semiconductor? There's the OSAT facility construction that I think is underway already. Give us some timelines. And then what is exactly the thinking with respect to getting into the design side of it? Because that's obviously where the higher margins are. In terms of expecting some revenue, what are the timelines you're working with? And out of this money that you're raising, so 3,500 crores is the QIP money, then there's cash on the book. If you could give a rough breakup, how much towards, say, organic or inorganic growth in semiconductors, how much towards your traditional business, some idea of how you're going to use the money, capital allocation over the next, say, 1 to 2 years?
So if you see, the OSAT business is already progressing. The construction is on way. The management team is already in place. And as for the plan, 2026 is when we'll see the revenue coming out of that. And that's absolutely on the time that we have. Now with the design acquisition of Renesas for radio frequency components business, that opens another area. Now again, obviously it's under the regulatory approvals, which will take, in my opinion, 4 to 6 months at least, because there are multiple agencies to get this together. So having said that, the breakup that I said right now, the clear visibility that I have is almost 1,500 crores we'll be needing for capacity expansions, which is internal. We already have commitment for almost 1,300 crores for these acquisitions, investing into those. And then we want to make sure that we are not running out of cash. And that's the reason for raising the money, QIP.
So 1,500 crores towards, internal expansion of existing businesses, 1,300 crores towards acquisitions. Can you, give us a breakup in terms of how much semiconductor, how much, for instance, the railways, which is becoming such a huge part of your business. Do you have that visibility right now?
So the breakup is not very clear right now. That's what I said, it's the high order figure. And as we get clarity and we keep talking, we'll keep sharing with you.
All right, Amar, it's good speaking to you today. You have taken over and there's a lot of responsibility on you. This is a stock that was at around 10-15 rupees a few years ago. It's at 800 rupees, but as you've mentioned, you have a long runway in terms of your capacity that you're putting up, inorganic growth, as well as diversification. We're looking forward to chatting up with you in the coming quarters as well. Thanks a lot for joining in.